Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. Disclaimer time. This is where I tell everyone to lighten up. It's just a podcast. Trading is like that roller coaster at the amusement park. Thrilling, unpredictable, and potentially stomach-churning. What works for one person might leave another clutching their hat in the wind. Our hosts and guests, they're awesome, knowledgeable, full of insights, but we're not financial advisors. So don't rush to make any investment decisions based solely on our banter. Always consult with a professional or do your own research. Plus, let's face it, we like to have fun, laugh, enjoy the trading ride together. It's all in the name of good podcasting fun. So remember, take it easy, don't bet the farm, and keep your seatbelts on at all times. Thank you for listening. Hello, everybody. Welcome back to the China Shop, home of the Band of Traders. I'm your host, Kyle, and joining me today, we've got the Rickest of them all, the whitest Rick I know, Slic Rick. Is your name actually Rick, or are you just a fan of Dan Harmon?
No, so I got called White Boy Rick in another Discord because I listened to a lot of rap music, and I was listening to a lot of Tupac.
Oh.
So then they called me White Boy Rick after the guy that's from... It's not like I was slinging drugs or anything like that. They just called me that, so it kind of kept, and I haven't changed it since because it kind of became my persona.
Oh, I thought that was a Rick and Morty joke.
No, it was White Boy Rick from the guy that is from Detroit that was like the biggest cocaine dealer and then eventually got out and now is selling marijuana.
Who is that? I don't think I've ever heard that story.
I'll send you the link to the documentary.
Okay.
He basically was like 16 when he was helping his dad run drugs and guns. And at the time, the guy that was in Beverly Hills Cop, the chief, maybe he was the police captain, I forget which, he was the actual police chief in Detroit, and he was very corrupt.
What? Get the fuck out of here.
Allegedly. Yeah, allegedly. And what happened, Rick and his dad were doing all this stuff.
Mm-hmm.
What happened is that Rick... he was an informant for the FBI for a really long time, but it wasn't him, it was his dad. And his dad was feeding the FBI stuff because they knew that this place was corrupt. But then some of the FBI agents were allegedly corrupt too. And Rick was slinging coke like it was going out of style. By the time he was 18, he was in jail. And they just called him that because he was the only white boy that was hanging out with all of the black guys. And they had a very intricate scheme going on, and it was very well put together. But the problem is that it was so corrupt that even the DA, who eventually ended up becoming the mayor, she was basically against him getting exonerated because I think she knew too much. And I think she just is done with just finished up her term as mayor or something like that.
Good Lord. Yeah, send me the name of that documentary. I'll love to check that out.
Oh, it's a good one. I think I've seen it probably like 50 times at least. At least 50 times.
Before we dive in any further, do you have anything else you'd like to promote?
I'd like to promote Vanta because especially with what we're going to talk about today, I'd actually like to tie it in because it's really not more of a promotion. It's more to get traders to understand that when you're starting out, you need to really work on the basics and all the, the caveats that everybody kind of follows with what you tell a new trader to do. But you also need to keep an eye on progression because I feel that what happens is that specifically, this is kind of like really what I want to get into, and it'll sum it all up through this one statement is you need to think about how you're going to get yourself to that uncomfortable position to keep growing because we all come into this thinking that we want to be professional traders, but there is nothing out there that really shows us how to go about doing that. So what I'm saying is that the connection would be that the way to connect the beginning to the intermediate, kind of like what Vanta's doing. They're doing something that's very unique and something that not a lot of people do, where they show their screen, they trade live. And what I want people to understand is once you can find your levels, I think that you need to stop spending so much time on that. We talked about that pretty religiously. To be able to kind of, what I feel is kind of shortening the curve, the learning curve, is you need to go in and you need to look at a DOM. You need to get used to execution. Grab an apex, grab a trade day, grab a top step. And those are the only three that I would ever consider doing. Grab one of those and start trading and get used to those feelings. Because what happens is, with as much time as we spend on edge development, all you really need to do is you need to look at the edge and internalize it and go, okay, do I feel this? And that's this has been my route. And I've only been trading full time for 3 years, and I've been very lucky.
Yeah.
But at the same time, it's been very intentional. When I was getting ready to quit, I basically had a whole bunch of stuff laid out about what I needed to work on, and I structured it. And it just gets to the point to where when you're working a full-time job, you lose out on those hours, but you don't need to. If you go through, you have this structure of how you're going about doing stuff, you're fitting it into your day, you should be able to kind of accelerate that curve a little bit. Because really, in my opinion, and where I've seen success, if you spend more time on the execution piece and also the managing piece than you do on finding the levels, I feel like that's going to pay more dividends than anything else, if that makes sense.
Yeah, I think it does. Let me get my little spiel here out of the way, and then we can just jump right into that.
Yep, sounds good.
I feel like there's a lot of meat to cover there.
Yep.
A lot of meat on that bone. All right, so if anybody else listening here has any questions or suggestions or corrections for future guests, you can send them to us. Makes my job much, much easier. Do that via email at bandoftraderspodcast@gmail.com, or you can join our free Discord server that Rick mentioned. You can even DM us on Twitter. I refuse to call it X, at FinancialInept1. I'll have all those links in the episode description, so you can check them out at your own convenience. All right, let's take it back, though, a bit, Rick, when we start here. So kind of talk to me about like your start, like what got you into the markets and like what kicked off that journey.
Well, what actually kicked it off was when I was 16 working at Walmart. Went into my head that I wanted to trade stocks.
I worked at Walmart when I was 16.
Excuse me, Kmart. I said it wrong. I was working at Kmart.
What'd you do?
So I worked in the electronics section. Okay. And I did that 2 days a week because they worked with my football schedule. Football was really important to me when I was growing up. And all I did was I would work out, I would train for football, and I trained for track. Well, with track and field, I was absolutely garbage at until we went up to a throwing camp going into my senior year at the University of Minnesota. And because I'm only 5'9", but I was well over 200 pounds at the time, I got basically set off with the girls, and they showed me the way that they throw. And I gained 7 feet onto my throw in that one session because I was throwing the way that was my body style.
Yeah.
And then I started winning track meets, and I'm like, I want to qualify for state. And it was all kind of on my own because we didn't really have a coach that even knew what to do with me. And he even said, like, you're kind of on your own. And so when it comes to, this is something that's important, like at a very young age, I was learning and identifying and trying to get things and goals accomplished on my own, and getting that feedback loop as to how to get better. And that's what you need to do when you get into trading.
It sounds like it was tough. It was a little bit tougher for you, though, to find that, like, you had to go and seek those people out, which I think kind of breeds like a different personality, or like, you can't be a timid and I can't think of how to say this. You know what I'm trying to say, though?
Oh, yeah. And I did when I got into trading. So as much as I want to kind of preface is, as much as I did seek people out and mentors, I also took what they had to say with a grain of salt.
Yeah.
And I know that that's kind of counterintuitive, and it makes it sound like, I'm very arrogant, but you need to have, this path needs to be personal.
Yes.
And once you make it personal, that's when you honestly, I feel, can reap the most rewards. Because if you're constantly waiting on somebody to help you get better, you're not going to get better. And there's no mentors really out there that are going to lay out what you really need as a trader. Because
a good mentor is they're they're going to pick your plans apart and ask you questions. Like, that's what the benefit of a good mentor is they ask questions that you didn't think of.
And how many of those are there in the trading realm today?
I can think of a couple. Eric Smolinski is really good at that, and he'll respond to just about anybody who shows some effort.
Okay, so another plug. I actually recommend Eric's channel to everybody that I meet
God,
because I that's where I got my start was options.
Yeah.
And there's a lot of learning that has to go into options if you're going to go that route as opposed to directional trading.
Mm-hmm.
And there's a lot of people that I talk to on a daily basis. I think I've recommended like 5 or 6 of them to watch Eric's channel.
Yeah.
And one of the guys was talking to me about how, so Eric's so clear and concise with his information that this guy was sitting there and they pulled it up on his TV and him and his wife started watching it. And now his wife is paper trading with what Eric is saying.
Fucking love that, dude.
And yes, I know that I don't talk to you guys a lot because I'm kind of a hermit. A lot of stuff that I take that I've been promoting kind of behind the scenes just because I've been through it all. Like I've been through so many discords, and the way that Eric delivers the information, but also it's the correct way, because when he talks about using spreads directionally, he's absolutely spot on, because you're constantly fighting Vega, especially if you're 0 DTE, and if you don't get it right away, it's going to be a little bit cumbersome. But there's a lot of guys that I talk to that it's like, just watch Eric's channel. He'll clear up a lot of stuff, because people will ask you, how do you do this? How do you do that? And I can tell them,
right,
because I've done it for years, but it's like, it's easier because Eric's just got a one-stop shop, and it's just a wonderful YouTube channel.
There's so much content on there.
So like my journey kind of started way back when, because my dad used to have me wake up every morning and look and see where Hormel stock was trading, lean hogs, oil.
Hormel. I've traded Hormel.
Yeah. I mean, and that's where I kind of started cutting my teeth in the professional world, was at Hormel and operations. And that was something that if I didn't get into that, it was something that was taught me process. And that's why I have this little saying that people that have worked in operations are going to be better suited to going into trading, because trading is not about the nomenclature that they have. It's about the process.
Yeah, it's not about innovating.
It's not.
Right.
The famous Baba term, innovating, is something that needs to be a mainstay in the dichotomy of trading. I mean, it needs to never ever leave, because that's the one way you can basically figure out, am I getting too far over my skis? Am I not? It's a very of polarizing term.
What's the other phrase he uses too? I have precedence for this, or something you have precedence for. I love that term
which
too.
means that he's got an A+ setup, and that's stuff that, kind of like what we're talking today, getting from that beginner and transitioning to that intermediate, so that you can get to the point to where Baba's at, to where you can start identifying when you're doing stuff like that.
Yeah.
And that's why it is that it's so important to internalize, whether it's through journaling or whether it's through reflect. There's many ways you can go about doing it, but you need to internalize. And that's kind of what I talk about a lot. Mm-hmm. And I mean, really early on, I was just infatuated with the markets, and I went to college for a year. I ended up working at Hormel when I was 19. And I used to think like I was just going to be a failure at life. Like I'm never going to accomplish anything. So when you think that you're going to be a failure at life, what do you normally do?
Yeah, you self-actualize.
Yep. And I started waking up every morning reading economics books. So I've read just about every major economics book that there is when it comes to Keynesian, new Keynesian, neoclassical economics. I did not read about modern monetary theory, because I thought that it was a little bit of a farce. Mm-hmm. One's net asset is another's net liability. But I mean, I just went through this whole process. But then what happened is that I became super, super obsessed with game theory. Mm-hmm. And I became so obsessed that Nash's theory of equilibrium, the Nash theorem, was something that I could recite and write out. And I started to learn the math behind it because I was obsessed with it. Because like I said, I thought I was going to be a failure. So I thought that if I learned more, it would help me. And it was basically almost like a shotgun without an aim.
Right.
And that's kind of what I was doing at the time.
But that's kind of the journey. That's kind of everyone's journey, though, isn't it? Because you don't know what you need to know. You just kind of you go through this phase where you gather information for year, 2 years, however long that takes. It's different for everybody, but you're just gobbling up information. But then eventually there comes a point where you have to try to figure out how you're going to put what you've learned to use. Like you don't necessarily need to learn anymore. You've got enough information. Now you got to start putting it to practice.
And that's what kind of happened is that I had all of this just useless knowledge. And it was like something that I could recite, and it didn't really do me any good. And I didn't
Right.
know what to do with it. And it actually took me a couple of years because what happened is that it would have been in 2014. When I got to Hormel, it wasn't even 18 months and I was out of the union. I got a promotion
Mm-hmm.
to work in the front office, but it wasn't working in the front office. I was basically working in accounting, standing at a scale, weighing up vats. So it taught me accounting. And what happened is that I just kept thinking, okay, I'm just going to keep trying hard and keep trying hard. And I got promoted to supervisor when all my friends when they were all graduating from college at the same time to do the same job.
Hmm.
So I'm sitting here thinking, well, this isn't so bad. Like, this is something that's like, okay, I'm going to be making a lot more money than what I've ever made. I'm so used to making $13.80 an hour for years. And it's like, okay, now I got a pretty good pay bump.
Right.
So then what happened is that I've got all this like prior experience that the transition to being a supervisor was not that hard.
Yeah.
It was just basically how to deal with people. Well, I had done that when I was a captain of the football team and dealing with stuff like that because I had such good coaches who were prepping all of us to be leaders,
Mm-hmm.
and they were taking the time out of their summer to have leadership courses. I'd do my leadership course, and then I'd go and work at Kmart, and I would hit the gym, and that was basically all I ever did when I was in school. So I transitioned to the supervisor role, and then I start to get a little bit of money because I didn't have any college debt or anything like that.
Yeah.
And even with the year that I went, that I had already paid it all off. And I was just, doing all these things. And my mom and dad, they pushed me a lot, but they
Mm-hmm.
did it in a way of not saying, I want you to specifically do this. And that's something that I took away from the way that they approached me.
Ah.
And I think is just why it is that I was able to be as successful. Because it wasn't like when you start to push a kid and tell them, I
Yes.
want you to do this, you might put a ceiling out.
Right.
And they were just not like that. They pushed and they pushed. They were very supportive, but they pushed a lot. And it caused a lot of friction because I'm a very high strung individual. So my dad and I butted heads. My dad and I butted heads a lot.
Right.
And that's because there is no difference. We look the same, we act the same. There's just no difference between the two of us. And it's just how it is.
I just want to touch on what you talked about with like your transition to a supervisory role. Like one of the things that I've noticed with the supervisors I've worked with, and I was blessed enough to take on a supervisory role in a maintenance department for the steel industry for many years. But the humility is one thing that the majority of them just seem to lack. There's that one aspect of it where like the idea that you don't have to be the smartest person just because you're the supervisor. Like, no, your job as the supervisor is to put the people that are the best qualified for the job that needs to be done into the positions to succeed. Make sure they have the tools and the resources to get the job done. And then you take that attitude that you're coming in with, and then you combine that with the parents' attitude of giving the people that work for you ownership. Like, where if I give a task out, I'm not telling you how to do it. I'm telling you what needs to be done and what your resources are and your timeline is. If I tell you the step by step how to do it, one of us is redundant.
Well, and that's the thing that is lacking in today's basically something like within that phylum of organization.
Mm-hmm.
So, I actually like you just like you said, you hit the nail on the head. The super think that they need to be the smartest ones when in reality, they're just there to enable the people that are the process experts to do their job and to take obstacles out of their way. That's the only thing that I saw my job as.
Yeah, especially the upper management. Like my job is to be the buffer between them and you, so you don't have to be bothered by what they're doing.
That's what I always say too.
Yeah,
It's
yep,
if they've got a problem, they can yell at me and then we'll move on because it's not
right,
like they're not going to yell at you and disrupt your workflow and it won't happen that way.
right.
And it's just amazing that you don't see that. And the biggest thing too is that there's no seniority. Seniority is a lost asset because we used to have at Hormel, one of the departments that I was in, it was called Dry Sausage Pack, where we sliced the pepperoni and everything. And we had so many people there that had so much seniority that if I had a question, now I'm the supervisor, but the forklift driver that had been there for so long that he knew exactly how everything was going to go. So like we put in this new line. And that was kind of like a lot of what I did there, because we were always expanding. They were always getting better. The company was always growing. This is a brand new line. And we finally like gotten a lot of the kinks worked out. And I'll never forget going up to the forklift driver and being like, because he's getting his butt kicked and he's got 30 years of seniority. And he's a younger guy for 30 years of seniority. So it's like, he's just getting his butt kicked. And I walk up to him and I'm like, are we going to be able to break a record today? And his reaction to me was, yeah, plus a couple. It's like, that's the type of level that you want to get on when you're constantly working with people. Just certain things that when it comes to seniority, that is a lost asset. And if you look at the people that have been working in the industry, in the trading industry forever, you always hear about these guys on Twitter that have one line on their chart and they sling contracts like it's going out of style and they love it.
Right.
That's because they spent the multiple years to get to that point. You know, like,
oh yeah, like 2-year flipper.
Yep, him. Because if you want to try and conceptualize or even like mathematically put into what it is that he does, you're going to be scratching your head for forever.
Right.
The guy knows his stuff. Exactly what I always talk about. They always like to use the word discretionary like it's derogatory. But then you tell him in his bank account that his discretionary trading is not the best.
I don't think he's necessarily discretionary. He's got very specific things that he wants to see. He's just done it for so long that
it's exactly right.
Like maybe it was intuition at one point, but I don't think it's
his process.
I wouldn't call it discretionary.
His process is this, like when it's as defined as what he has it, and he also has been able to get so intimate with understanding of the products that he can see the timers as they're coming. And now you got to think about it. He's been in every type of transitional period that you could possibly have within the marketplace.
Right.
He capitalizes on it because he's seen whether it's HFTs or it's market makers that are unloading those clips. He can see it through the tape and then take a direction. And he's also the one that's kind of reinforced a lot of the times of day that I trade in.
Oh yeah,
because we have very similar trading styles. It was just so like when you're cultivating your worldview, and especially within the trading, it's got to be very specific. You can get your combination of people that kind of just post for fun, and you also want to have more people that are basically reinforcing or they're giving you better ideas. And I've got in the bond world, you wouldn't even believe. I cannot say enough about how good these people are with how it is that they help me with my trading access. And they don't, if you ask them, they don't do anything. Between Brent, Black Lion, between M. Liban, and 2-year flipper, macro tactical, those four, if I just followed those four for the rest of my bond trading career, I'd be fine.
Yeah.
I wouldn't need anything else because there's just so much that I get out of them. But then if you branch off into the vol Twitter, like Tina, who's awesome, she just absolutely kills it. You've got Prism.
Curly Gal.
Yep, her too. I mean, there's just like a bunch of them that are like Prism especially. He's somebody that is, I think, very gifted. And I know that he is really good at what he does. And you don't even need to see anything other than what he shows on the surface level of Twitter. He is one of the more intelligent individuals that I've acted with. And I highly recommend everybody follow him. He just, like, when you start to look at the themes that these guys talk about, they're not blaming the markets for anything.
Right.
And when you quit blaming the markets, you unleash that potential. Instead of saying, well, this happened today, this happened today. It's really, well, did you just manage your risk? Did you not?
Right.
It's really all that it is. And there's just so many of these people that are out there, especially on Twitter, that they can help. You don't need to like ask them for help daily with how much information that they're putting out there, that you're able to basically look and be like, this is pretty close to how I trade. And then you start to get it reinforced and reinforced and reinforced. And then like they show that they are also people too, and they have losses. They should also show that they're there because they want to make money and they want to make a lot of it. And that's the thing that sometimes like people will look at that stuff and want to make a lot of money now. But you remember how many years these people put in to get to that point?
Right.
I mean, it's just incredible.
Remember George Papazov, and I think the first time we talked to him, we talked about the expectations that traders have. It's like, you imagine your first day at Firestone, like you go there to work at this tire place, and like your first day there, you're like the janitor, you're supposed to be sweeping up, and you're telling the guys, I want to make CEO money. Well, let's spend a few years here first and see if you can learn like this job. Like,
well, that's the only time that happens is if you're like the guy at Pepsi that was sweeping the floor that created the Flamin' Hot Cheetos.
Oh, goddamn.
They had a bunch of Cheetos left over and he wanted to flavor them. And then that became a massive hit amongst any type of culture. And that's a guy that's been promoted many, many times. That's something that's a one-off. And it's like, you got a lot of, even if you start, a good thing to do is also for people to start reading The Greatest Trade. If you read The Smartest Guys, The Man Who Broke the Market, just any books about hedge funds, look at how even the hedge fund managers at one point in their career or multiple points thought that they were done. And they thought, what in the heck are we going to do? And they've gone through all the same things that we have.
Oh, really?
So for them to get to be multi-billion-dollar, like Jim Simons, rest in peace. There's a lot of stuff in Vanta that they do automatically or manually that he did automatically. And if you look at some of the things that he did when it came to trend following and whatnot, those guys did without even knowing that he was doing any of that stuff. But this is a guy that has had the best returns of any fund manager in the entire world.
Yeah.
And he after a while just moved into that quantitative type of trading system. And most of the guys that worked under him were PhDs in mathematics, and they didn't know anything about economics, but they knew what they were doing, and they knew how to get money out of the market because they were good. Those guys were so good. But you got to understand, some of them were sleeping in their offices on the couch to be able to just keep parsing data and getting data. And I call it discovery. It's when you go through discovery and figure out like your edge, or you figure out how to reinforce your edge, anything like that, it's super important to do because like you can make yourself feel more comfortable after you do back test, or if you're just looking at a chart and applying your actual edge, it just is a lot easier.
Yeah, the only way you're going to get confidence in any of your ideas is to see it play out many, 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 many times.
Well, that's how I ended up in bonds too, but that's kind of.
I was going to ask you that question, but yeah. Are you looking at my notes? Because you've kind of hitting everything on here without me even having to bring them up.
Well, that's just like, so I have ADHD really bad, so I have to keep a timeline in my head, or I'll just keep having tangents like this. The ADHD helps me tremendously with trading because the flashing lights on the screen can keep me locked in for hours and hours and hours, whereas anything else I have almost zero interest in. I can read, and I can read for hours until I fall asleep, but that's about the only caveat to that. But it has to be something that interests me. And like for most of my life, everybody either thought I was going to be in special education or advanced placement classes. There's no in between.
Right.
And that's just, I mean, the last time that the school called and said, we think he should be in special education. My mom's like, no, I don't think so. And then that was the end of the story for that. And then all of a sudden, my sophomore year of high school, 2 years later, I'm getting 100% grades in mathematics. And it's like, it's not like I was smart. It's just that it held my attention and I could retain the information.
Yeah.
And that was like the nice part. It's like, okay, now we're finally finding our niche a little bit later on. But I mean,
yep. But it kind of ties back to what you were saying in the beginning there. Like you have to find, like your journey is personal to you. Like the things that you find when you're looking at the people that you look up to, you shouldn't be trying to copy everything they do, but you should be looking at like, hey, I kind of see what he's showing there. Like maybe I'll dig into that a little bit more, or I don't understand what he's putting on this chart. Maybe this isn't for me. I'll move on and find something else that maybe I understand better.
And that's that sampling process with that edge discovery.
Yeah.
And you can also like, after you've got that edge discovery, you can for sure put it into your playbook as long as it falls in line with those guidelines. But at the same time, it's just, so there's like, for me, I call them the trifecta days. There's a lot of times that Macro Tactical and M. Liban will post on Twitter and say that they're looking at this level. And it happened last summer. It happened a lot.
Yeah.
A lot. And hey, guess what? I had that same level. Well, if we're all three looking at that same level, which I feel like it happens in bonds more because it's not convoluted. There's not a lot of people that are in that realm.
Right.
And then when you get that confirmation, it's like, okay, there's been many times that those guys have contributed to my advanced P&L because it's like, okay, so I was right. Now, what I want to do is while I'm getting ready for the trade, I need to look at clues. I need to make sure that I'm engaged. I need to make sure that I'm writing down notes or at least internalizing it. For me, I know that this isn't going to be the best, like people aren't going to find this in favor, but I don't journal because I've spent so much time trying to figure out how to be a better thrower, better in the weight room because I actively push the weights in the weight room. And then with trading, I found that as long as I'm taking to heart, is what I always call it, my mistakes that I've made, usually I can kind of change things on a dime. Like I don't usually go through the same issues constantly. And when I do, I get really, really upset because I know to the day, usually when I did that exact same bad trade.
Have you tried journaling and just don't like it, or?
No,
That's
not the case.
I would say that there's always a benefit to it.
There is, especially when you're trading on your own.
Yes.
It's just that I think that I have there's just something within my head that I can recall just about any trade that happened. I like last week when Banks was calling out a short and a long, I had again, that's a part of the trifecta. If he's saying something, I'm gonna more than likely be taking the trade and looking for some type of confirmation piece. And we were looking at this specific level, and of course CPI happened and it hit that level. It went past the level by one tick and then completely sold in reverse for a point and a half. And it's just something that happens all the time. I mean, when I say all the time, I mean like when it's really important, especially on those days. He trades completely different from what I trade, and all those other people that I mentioned before trade completely different. Nobody trades the same. But the whole point is that a lot of times you should have some type of confluence with your trading in conjunction with their trading. Those are the guys that have done it. They've been there before. They have dealt with all of the nonsense. It's like you want to take and see what they've done and get better. And that's kind of the mindset that I've had since I started with the people that I've been working with. So like when I got to Hormel, what happened is that after a couple of years as being a supervisor, I started to trade options.
Okay.
And I would do exactly what Eric says not to do. And I got lucky. And my wife and I have had many, many conversations about this because if I laid out the timeline and told you every year that I had started and I told you why every year I was lucky, you would agree with me.
Yeah.
And so like I started doing that. And then what happened is that I started to make the exact same amount of money that I was working at Hormel. And there was just a lot of I would do put credit spreads or call credit spreads on the major, the big name like Mag 7.
Yeah.
Is what they're called right now. And every Sunday I would research what do I want to do and just look for a directional trade. And mind you, I'm brand new. So what happened is that while that was happening, it wasn't just randomly putting one on supply and demand zones.
Right.
Because I got into this Discord that a couple of the people were trading like that. And it was about 2 years before I quit. And I was like, well, I like that. So then I started to watch videos on YouTube and I started to see different things. And what was happening, I was like, okay, so I want this to be my edge. In that Discord, there was a lot of guys that were doing that specifically. So I kind of didn't really reach out to them, but that Discord, it was really unique how that guy ran stuff. He has people that work for him, and then they will do like presentations on like different days of the week. Thursday was what this day of the week was, and I'm not sure if he runs it like this anymore because it's been like 4 years since I've been in there. The guy that was in that Discord that was running it had been trading full time for quite a while, but I mean his Discord was massive, and the amount of money that he was charging was comparable to a lot of people, but it was still on the high end. One of the guys that I had met was a supply and demand trader. So what happened is that in April, it would have been 2021.
Okay.
When 2021, the turn of the year happened, I decided I was going to quit my job and trade full time. So I tested out a couple weeks at a time because I had so much vacation.
Mm-hmm.
And when we had gotten COVID over Christmas, I had spent the whole time running through what I had deemed as my routine. So when it came to reviewing your trades, journaling, and then doing market prep. And then I had basically had on a calendar, I went through and I put up all of these different things on a calendar. And I said, at this time, I'm going to do this. At this time, I'm going to do this. And at this time, I'm going to do this. And that was getting ready to quit, knowing that when you quit, you're going to go into the wide world of unstructured.
Right.
Operations is nothing but structure. I knew that if I didn't do that, I would probably fail immediately because then it would just be like being retired.
Mm-hmm. A lot of people fail at retirement too because they don't have any of that structure. Like you almost have to plan for that too.
Well, and I wasn't even 30 years old at the time.
Right.
And I'm quitting my job to trade full time. So it's like, okay, I understand how this looks. So it was Easter. I was only able to get 1 week off instead of 2 because somebody else had it off. So I did my 1 week over Easter. And on Sunday, I texted my dad and I'm like, again, him and I used to butt heads a lot, thinking like, I better let him know so that if there's some fallout from it, that we can talk about it and then be done with it. Right. I text him and I'm like, hey, Monday morning, because he works at the same place that I work at. He works at Hormel. I text him and I say, hey, I'm going to go in and I'm going to put my 2 weeks notice in and I'm going to just trade full time. His only response back was, I think that's a good idea. And I'm just like, okay.
Oh, that's fucking awesome.
So like, yeah, you want to talk about lifetime, like great moments besides kids and marriage. That kind of ranks right up there with it because he understood though.
Mm-hmm.
And
I had the same experience. With my mom when I told her. I thought for sure she was going to try to talk me out of it. She said, no, I love this. Go for it.
Yep. And my mom has always been my biggest supporter. Like a cheerleader to a nauseating degree.
Yeah.
And it's like she just, and it's what I believe kids need. Like you need to have somebody that's hard. You need to have somebody that's a cheerleader. It was basically like they had always pushed me and it kind of created that internal struggle, but it wasn't a struggle. It was a drive and it's like really hard to overcome. It like trying to explain that drive, it never goes away. And even to this day, I still get like wildly frustrated if I'm not where I want to be. So like at that point, I tell him, hey, I'm going to quit. He goes, I think that's a good idea. And I told my wife, I'm like, this is what my dad said. It's like, so we're doing this. So I go in there and I quit. And you got to remember, I started at that company when I was 19, knew a lot of people, had some really good mentors. And then they were all like, well, wait a minute. Are you serious? And I'm like, yeah, I'll be done next Friday. And it was just like, that was it. I mean, I had quit and I had this new structure laid out. Well, at that time, I had transitioned into trading Tuesdays and Thursdays of SPX options, the S&P 500 options.
Yeah, you're still doing options at this point, right? Like you haven't moved into futures yet? Okay.
Nope, I have not. And I'm still trading options because I was making an income off of it. Well, we were in a rampant bull market.
Yeah.
And I would be able to sell because that was when we had a Wednesday, Friday, and there wasn't 5 days a week.
Yeah, I remember that now. Yeah.
So I had started to venture out and I started to watch this YouTube channel called InvestiTrade. And then what I did was I paid to get the course. I watched the course and it was like a couple $100 is all. It was like something ridiculous because what the guy was offering was kind of undervalued in my opinion. And he has grown it into something that's a lot bigger. Plus he's been more transparent and I'm still involved with it. And every once in a while, I'll let them know, like, hey, just so you know, your trading style is something that I've been kind of working on, and I use it in bonds, and it works tremendously. And
what's the name of his channel again?
InvestiTrade. It's Carmine Rosato. That's the one that I got probably the most out of.
Okay. I'm going to make sure I link that one in the notes.
Yep.
Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back. Fresh off a rebrand and ready to help is Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com. And that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address.
When it comes to edge discovery and anybody that is doing supply and demand, his is the most refined, and it's the one that should be followed the closest. Because my trading strategy actually comes from American Trading Group or whatever it is, and they have had some issues. Well, I met some of the guys that had worked with them, and they were teaching me. And one person in particular that did not actually, he was in that Discord group. I paid him a good amount of money to be my mentor while I was getting ready to trade full time. And, you know, at the time, when this was all going on, like I was using him as a mentor, I was kind of understanding supply and demand a little bit more. And I was sitting here thinking, I don't know that this guy actually knows, and it's fine. I'm cool with paying out whatever money I paid out. But he was just like kind of giving that, you're doing a good job, keep doing it, nothing particular.
Right, okay.
And that was it. So then I was kind of like, it was April at this time when we were working together. By about May, I had quit working with him and then didn't want any of my money back because I paid him up front for a discount, blah, blah, blah. All these things, I kind of take it with a grain of salt. And if I make that decision, I live with that decision. And then I didn't talk to him after that. And I kind of knew that this was going to be, okay, I need to figure this out on my own. And I could kind of tell maybe like there wasn't many people that could show me. Well, one guy that I was working with, that he did work at the American Trading Group, he was helping me work on, it was his anchor strategy. I was working on it with him. And he came from that where he was a supply and demand practitioner, but more to the T as to how it is that those guys went about doing it. And I really, really liked it. He was very clear and concise. I haven't really had contact with him in a couple of years. And not a lot of people have, because he had his own small businesses and he was trading on the side. And I don't know, this was the time when everybody had a Discord. They were all popping up because it was just a high liquidity environment. So I'm coming into this, and it was when GameStop and AMC mania. Well, I had made my summer basically in June of that year, and I had tripled my account size by July.
Jeez.
So it was like, and that was just trading options. So this is one important thing that I want people to understand, kind of like what we said at the beginning. You're going through the very beginning, understanding your edge, but you need to keep your eye on the future. It needs to be kind of like a partial eye, but that's what I was doing. So like I told my wife, I said, we're in this environment of low rates, but it's not going to continue.
Right.
So understanding macroeconomics, I was like, I'm going to more than likely get, in the first 2 years of trading, I'm going to more than likely get a rampant bull market and probably a terrible bear market. And then what I thought going into this was going to be great experience. Like I got lucky. That's why I keep saying I got super, super lucky.
Got to experience.
Yep. And you can't pay for that. I got like wildly lucky. And we talked about this all the time. Like, this is super lucky. Well, we go through that first year, pretty good year for, full time, but I'm in the process of transitioning out of trading options.
Okay.
And so, I mean, everybody's going to be like, why would you transition out of trading options if you're making money? Well, it was because I knew that I was using them for directional trades. And I figured if I went in, I'm going to trade directionally, but really I'm more of like a reversion to mean type trader. I really need to start to think about like trading futures. It's a little bit easier on the capital with the capital requirements and margin as opposed to trading the SPX. but also I felt like it was something that I needed to do for my natural kind of evolution as a trader.
Why bonds then, out of the different products that you could have
Bonds
chose?
bonds didn't come until almost a year and a half, or yeah, it would have been a year after that July.
Okay.
So out of necessity, because I was trading full time, my grandma had fallen and broken her hip, so I was the one that was free to do this stuff. So
Mm-hmm.
what I did was I would wake up at 2 o'clock in the morning and I would watch the London session,
Mm-hmm.
and then I would take my grandpa 2 days a week to see my grandma, and then I got used to that, and I got used to seeing the London session, and that was when I started trading ES minis.
Mm-hmm.
I'm looking at all this stuff, and then it was the spring of the following year, 2022. I really am going into futures, and then somehow I find OFL,
Mm-hmm.
and I go into OFL, and my whole intention going into OFL was actually and this is going to sound very, very what's the best word? Kind of dumb, but I went in there
Mm-hmm.
thinking I want to be able to see better what's happening inside the candlesticks.
That's not dumb.
I want to be able to have more confirmation. And that was my whole intention going in there. Well, they provided that.
Yeah.
They 100% provided that. I got a Delta footprint chart, which I never knew about until I got with them. And one of the very first things was they were doing basically zones that were very in confluence with how I trade.
Mm-hmm.
And they had proprietary to be able to see. I know that this isn't going to be, this is kind of derogatory, but trap traders.
Oh,
And
right.
it was, well, they had me beta test out a lot of the stuff. And I'm like, holy crap, this is exactly what I was looking for. Again, lucky.
Yeah.
That's luck.
Wow.
How does that happen?
Luck is when preparation meets.
It
Yeah.
is. I agree with that. But like at the time, I'm going full time. So I start digging into it, looking at all this stuff, figuring out like, okay, at what point do we say that there are trap traders or there not based on volume instead of over time? And then I started to develop this thesis to where it's like, okay, so I like that one. I want to do what I called 3D trading, where I'm looking at volume by price, volume by time, and then I want to look at the delta. And that's basically kind of developed my trading system.
Mm-hmm.
And it was just not necessarily a spinoff of supply and demand, but it was to enhance. And that was the only thing that I was there to do. And what happened is that Carmine was doing this exact same thing at the exact same time.
Okay.
And then it's like, okay, so that gives me confluence. Like I said, you got to find confluence in just about every portions of your life. And I'm like, great, he's doing it. I'm going to continue to do it. And he's just now starting to share that stuff.
Mm-hmm.
And it's something that he's been doing full time forever. And he's really young. And I don't know, I really don't. I think he's a couple years younger than me. And he's been doing it forever. And that was what OFL kind of gave me insight. It helped me not only automate, because like with the SMB way, they say edge development, you need to figure out execution, how to manage all of this, and then you want to automate, because the automation does help take things off the charts so that you don't have to do so much time on the prep work, and you can spend more time doing the execution work.
The less time you have to spend plotting all that stuff out, the more time you can spend watching and observing and confirming
and understanding.
Yep.
And that's a big thing that I think that we need to spend more time on than the edge development, because edge development it's actually very readily available. Like you've got so many different places to where you can be like, you need to kind of do the sampling fairly quickly. So like there's, and you and I talked about this the other day, where it's like, how do you manage a runner? There's like 9 different ways you can manage a runner. For me, I try to like kind of close out a lot of the nonsense by saying, what's your win rate? And are you hitting 2R? Are you hitting 1R? Do you have a 75% win rate? I mean, that it becomes irrelevant, because if you're sticking within the mathematics, a lot of it can become irrelevant after that.
Yep.
Because a lot of it is just convoluting. And we as humans do that. And that's a natural thing. So you kind of want to be aware of that, especially if you're more prone to it or not.
Yeah, that's kind of like with managing runners thing in particular. Like, I don't remember if it was you that said that or Bob or somebody said, like, if your back testing didn't take into account your managing of the trade, then why are you messing with it? Like, you set the trade up and you just let it go.
And it's something that's super important, because when you do that,
you said
it is, do twice. When you do that, it just becomes so much easier to be able to manage the emotions too, because then you're not oversized, you're not undersized, and But that's all a part, like I said, that process is more important than any of the other parts of the process because of the fact that that kind of hampers your trading more than edge discovery. Edge discovery is super important, but you should be able to tie that in with what your personality is. So like I go into OFL and they're all trading volume profile. I'll never forget DMing Leo and being like, is there a book on this? And then I started to look at it and I'm like, okay, I do like this. Like, I'm that guy that's like, I'm trading full time, but I don't know what volume profile or a delta footprint chart is. So I feel kind of like dumb, but I'm like saying, okay, what is this?
But I love that you actually are willing to stand up and say, hey, I've not heard of this. Like a lot of people who've taken the leap to trying to be professional, I don't think they'd ask that question. I think they'd be too afraid of looking silly.
That was like I remember sitting in the DM, Leo, like, hey, do you know where to find a delta footprint chart book?
Right.
And it's just like I started looking into it, and then they had some information on their website, and I'm like, okay, this is what I was looking for. Volume profile is what I was looking for. So then I was able to, this is going to sound bad, but I was seamlessly able to add that stuff in without hiccup. I mean, it was what I was looking for. And that's why, like I said, focus on what you're doing. Make sure that when you're in the process of trading, that's all you're focused on. But once we're out and we're not in a trade, how are we going to keep getting better? And what's the next step?
It's almost like you identified, like, okay, this is what I'm doing. This is what's working. This would improve it. How can I find that? And then you go and find it.
That's basically what I was doing because I wanted to, for all intents and purposes, see and find it is that I was doing what I was doing because I didn't have any idea. But working in operations and kind of working in the unknown, you know that if you're following a process, you're going to figure that way out. And as long as you're doing it in a constructive way, and full disclosure, I'm an extremely aggressive trader, so I need to have a little bit of boundaries. And at the same time, I'm to the point to where it's like I know that aggression level and how I'm going about doing it is going to help me, and I know that I'm going to get where I want to. But what's going to happen is that you're going to have immense growing pains. You're going to have a lot of issues. You're going to have a lot of ups and downs. And can your spouse take that? Can you take that? Well, going into this, there was no plan B. There was absolutely no plan B. This was going to happen. And when you get into that mindset of, okay, because we all have down days. Like 2 weeks ago, it was probably my worst trading week that I've had, not P&L wise, but it was just, I was lost.
Yeah.
Well, when I start to look back at and review why was I lost? Well, I mean, how I approached trading was not working in bonds that week.
Right.
So if I limit my trades and all of a sudden Thursday and Friday roll around, I'm negative on the week. And I'm like, all of a sudden it's like I'm back to making 30 ticks. It goes, well, what changed? Well, how the DOM flows, how your product reacts to certain things, information, or it doesn't, and it changes is super important. You need to understand, like, because it's a living, breathing entity. And I all of a sudden my wife wakes up and she goes, how's it going? And I go, bonds are bad. Oh, I'm used to them trading. And she's like, oh, okay, that's good. And she understands because she's listened to me say like so many times with how I apply my edge, certain things should happen at certain levels. They weren't happening.
Yeah.
And it's like, and I've even thought of, so I have a contingency planned for, let's say that supply and demand doesn't work at all in the near future. Something changes. Well, when you look at a candlestick chart, that's the all being. Like you can see things.
Yeah.
And after a while, people that are trading with size can't hide after a while. And so that's where I take that solace in that my strategy should work for a long time. But if I need to make tweaks to it and then start looking at different things, I know where I'm going to start because I've already thought about that.
Yeah.
So for example, let's say you got a 1 hour gained level or 1 hour demand in my terms, and all of a sudden they just start selling through it like crazy. And you don't, like, you get confirmation, you put in a higher low and they sell through it immediately. You take your stop out and you go, okay, sellers are definitely in control.
Yep.
So what do we need to do? Well, let's look at them, bring it back up to that level, and let's see if they offer it there. Yep. Okay. I just made up my loss and made a little bit of profit. If, let's say, so I've thought about this extensively, if it goes back up to that level, trades right through it, then I might have to sit and internalize it and think, okay, what do I need to do differently? Well, with bonds, M. Liban has taught me, and this happened the other day too. A lot of times, what happens is that it'll sell through your levels, but when it reclaims that after it's been a hard sell off, it's going to go back up.
Mm-hmm.
And we have had trades because of that little piece of advice. And this is public advice off of Twitter. He's not saying this directly to me. I mean, like, this is where people need to understand. You need to cultivate your following and get it into the right frame of mind, and not let all of this stuff kind of convoluted, because it's just as important to look at that stuff and understand it.
The best thing I did this, I think it was 2 weeks ago, I took an hour on Saturday and just every single thing that did not help me in my trading career on Twitter, I just, not for me, not for me, not for me. It took me an hour to go through the entire thing, but now my feed is nothing but, the stuff that I want to see, trading stuff.
And there's so many OG traders out there that will show you and give you tidbits of information, and it's really nice.
Oh, there'll be like 20 post threads that they'll put up, like just completely detailing a setup. Like, oh, I'll take a look at that. Is there anything there that I see that I like? Maybe I'll take a piece. If not, then I'll move on.
So the most recent one is when Tina was talking about on Twitter. She was talking about GameStop and GME and why it is that it was pretty delta neutral, and that there wasn't a short squeeze that was happening. There wasn't really a gamma squeeze that was happening. And all this stuff I learned through Twitter. I learned the difference between which is which. And generally speaking, it's probably a gamma squeeze. And she had this thread, and that was just, it explained everything. And when all that stuff starts to happen, and this time everybody thought that GameStop and AMC was going to be going to the moon.
They think that
it really wasn't, because there wasn't enough. Yeah, well, there wasn't enough volume.
Right.
Last time, we don't have the liquidity in the system. One can tell you that that's going to happen just off of ad hoc analysis time. We had liquidity going like crazy, and I was buying call options like crazy too, because people were sitting at home and getting checks each week and putting $700 a week into their brokerage account and just spinning it like it was going out of style. And I mean, there's just certain things you need to understand that happens and that you can kind of keep an eye on. And I mean, that was the biggest thing. And she had just a very, very good review, and it was a thread. And that's not something that she does very often, because she is busy and she does trade full time, and she trades big time and in oil. So, I mean, it's like, if you want to understand certain things, some of these people, you DM them on Twitter, and they'll explain it to you.
Yeah.
You just have to be, I don't think people understand. You've got to be.
Got to get outside your comfort zone and reach out.
Yeah, you do. And I mean, like I said, I have ADHD so bad that I have been self-taught most of my life. Like when I took math in high school, they let me do it on my own because I just couldn't sit in a classroom. And anytime anybody moved, my concentration was broken. So like when it comes to stuff like this, of course, it's going to be, at the time, it feels like just a struggle.
Yeah.
Like you feel like you don't get anything. And then all of a sudden, if you just kind of let your mind just kind of like clear, you go, okay, I can do this. And then you move on. And then you've got to have some conviction in yourself too. If you don't have conviction in yourself, it's not going to work. And that's just kind of how it goes.
Yeah.
So in the summer of 22, I'm starting to trade futures. And I did not like the way that ES was trading. So I moved to NQ. And NQ is like, okay, this is way better. I can get my 2R. Like, this is a lot better.
NQ is like crack.
It is. And it's like, this is just moving a lot better. Well, in that same time, Flurry basically said, let's do bonds. And I'm sitting here thinking, well, whatever, I'll try it. So he was literally the one that got me onto it, because so my mindset going in right now is there's a lot of traders that trade multiple products.
Yeah.
And I had already traded up to this point all the major currency pairs, futures, bonds, and then oil.
Yeah.
And that was about it. And gold and silver. And I had done all of that stuff. And so if you think about it, in this year and a half time of me being full time, I had gotten an education really, really quickly, because we were in a bull market like style. Coming into the end of that year, about November, we had is when the bear market, quote unquote, started.
Yep.
And I'm sitting here thinking, okay, this is the time. I've never seen a sell like this. But at the same time, you got to understand, I don't even know what I'm looking at because I've never seen this stuff before.
Yeah.
And I'm telling my wife, I'm like, I think this is the start and we're going to get lucky again. And she's like, wow, we just couldn't have timed this out perfectly. And it's like, no, we could not have. So I'm starting to trade bonds at that time. Once we move through Christmas time, I'm watching bonds and I'm like, why do bonds trade so well in December? So I'm still kind of doing both. And then the spring of the following year was when I basically had decided I'm going to do this full time with bonds. I started to look on Saturdays. I started to back test really old video of a guy that did an opening range break strategy of bonds and how he even set up his bracket. And then I started to do the exact same thing. And I'm like, started to look at supply and demand. I started to look at my levels and I'm like, this is crazy. It's been following my levels to a T. And it's like it follows better and it's probably a better transition for me than what it was with equities. So I'm like, I'm doing this. And then I was basically like, I'm going to just trade bonds. And a lot of it had to do with the fact that I felt like it was a less crowded trade. There wasn't a lot of people that were doing the same thing.
It's not as wild.
And I'm not really one to like follow. It's not as wild. And I'm just like, I'm committed. I like this. And don't get me wrong. I got smoked so many times. And I'm going to do this.
Yeah.
Oh yeah. I mean, it was horrendous. Like it was like, I would have some really good days and some really bad days because once bonds get moving, they move.
Right.
And it's like, but then if you take all of that emotion out, you start to review at the end of your day and you look, you're like, oh, okay, well, this was as simple as the second it invalidates this, you wait a little bit, let it retest it, and it's going to go. Something simple like that.
But see, you say you don't journal, but you do reviews, and I consider that journaling. I think you are.
Oh, no. I do. I look at it and I obsess. That's just how it goes. I try to say that because I think that you do need to review because there's no way you're going to shorten that learning curve.
Yeah.
And I have, so what I'm going to be this guy because I'm getting to the point in my career to where I want to start to move on to that next step. I do have a little mini journal with an erasable pen that I carry in my pocket all the time now.
Nice.
I used to do that when I was younger and I did it in the weight room because I would keep track of all the lifts and where I was at, percentages, everything.
Yeah.
And it's like, so I actually took that and I applied it to my trading.
Taking pieces that work for you. I love it.
And I also, after the fact, I would start to put in, there's this concept within the weightlifting community called RPE, rate of perceived effort. I started to apply that to my trading.
Yeah.
I wanted to know what that trade was. How easy was it? How hard was it?
Interesting.
And then you can kind of dissect as to the rate of perceived effort. When I started to think about it, there's an individual on Twitter named Chris Dover.
Yep.
And
We've talked to him.
He knows macro tactical. Yep. So he already had stuff like that. The way that he has everything structured is super important. And I think that most people need to, if they want to start out and close that gap, follow what he does. Because I was actually talking with him openly in Twitter about that concept of rate of perceived effort. Rate of perceived effort in weightlifting is on a scale from 1 to 10, 10 being the hardest. He helped me come up with the idea of do it on a scale of 1 to 5, because what happens is that if you start to do a 3 or a 4 or anything below a 5, it's insignificant. In between 5 and 10 sometimes becomes insignificant too. When I became in my 20s, I started to read statistics books because I thought that was going to be the promised land.
Right.
Well, now it helps with the discerning what's important information, what's not. So I started to, with what Chris helped me develop, and I assure you, these people don't probably remember talking to me, but I'm asking this question and I'm applying it, and it's going to be immediate. So he recommended doing a 1 to 5, and that's what I've always done. So like what happens is that if I get an overnight session where I trade a London session and it's a 1 or a 2, that means that it was a pretty good session and it kind of traded the way that it should. 2 weeks ago, it was a legit 5. And there was probably, I shouldn't have traded. And I usually use context clues. So like I'll pull up a 1 minute chart and see how quickly we're transacting. And if it's in bonds, if you pull up a 1 minute chart and you see it to where there's no transactions, probably wait. And that's like certain things that, little context clues that you can get that can help you. And that's certain things that I've learned over the years. Nobody's spoon feeding it to you. You do have to go after it. But if
the
you
information's
want
there.
to,
If you're willing to put
there.
yourself out there and ask, most of the time these people want to help. And there's something that just feels good about helping somebody, take that next step or put a piece together. Like watching it click in somebody's head when you explain a concept is like one of the greatest feelings in the world.
It 100% is. And this is going to sound very selfish, but I feel like I have the ability to explain things to people. I have the patience because I've been in a leadership position for a long time, completely went away from that and just focused on myself. And as like you've probably noticed, I'm very transient in Vanta. I don't go anywhere else. That's the only place that I go to.
Oh, really?
And there's a reason for that. Yeah. Because I've kind of taken the mantra of live by the sword, die by the sword, because it just, what happens is that you get to the point where you're like getting too much information at once.
Yeah. Yep.
You need to figure out how to
limit
get
some
that
of that
information, internalize it, and use it. Yeah. And it's not to say that it's because anybody's like bad. It's not to say that because anybody's good. It's just that it's super hard to get this fire hose of information down to a garden hose.
Yeah. You just got to find a place where you fit in.
So there's been a lot of like, when Flurry got me onto bonds and I started to look into it a little bit, I was like, this is it. And I hadn't had that moment the whole time that I was trading.
Oh, wow.
I was still sampling. I was still trading full time. And, we had enough money saved up to where it's like, we can do whatever at this point. And that was kind of like the most important factor of when you do quit, you do need to make sure that you have a plan and you also have some type of bankroll behind you, or you're using a funded firm. And I mean, that's just something that's very, very important because
you have to give yourself enough time.
You do, because you don't want to be putting yourself into that position. And, again, there has been nothing but basically being catered to by my family. Both sides, my in-laws, my parents, it's just like I don't know, to this day, I've never asked, like, why did you say that was okay? I never asked my dad that. And
you should.
I should. It's just that, like, over the years after I quit, I had already had a kid. I all of a sudden started to understand how similar we were and how much of a jackass I was when I was growing up. I was like, well, I was definitely a jackass growing up. And I don't think that I would, in my opinion, with how much they used to push me, it created why I am the way that I am. Now I get with a lady that we're going to be having our third child coming up here. I just have nothing but support. There's like, no, do you think you can do this? I've never had anybody say that to me.
Right.
And it's like, still to this day, like I said, luck has been tremendous. And, with poker, my dad loves watching poker, playing poker. So it's kind of fun for me to see Flurry and the guys playing poker, because this is something that him and I like to do together.
Yeah.
And we've just become closer over the years, ever since I quit my job. Nice, high-paying, stable job to go and gamble.
Yep.
See, the crazy thing is that somebody in Vanta goes, so your family is naturally a little bit aggressive. And I'm sitting here thinking, holy shit, I would have to say it's the opposite, but you're probably right.
Oh, really?
Like, yeah. I'm like, I like this outside perspective. They're like, well, so everybody's just naturally aggressive. It's like, wait a minute, are they? Like, it starts to make you question things. It's like, are they? Like, is that really like what's going on, or what's going on? Like, I was just like, okay, well, that's crazy. And yeah, maybe they're right. And we get to the bonds thing, and I'm like, I'm a bonds trader. I started trying to develop a Delta footprint for tenure with the help of OFL, started to figure some of that stuff out. And then what happened is that May of last year, we're coming up on a year. So when I worked at Hormel, I became really good friends with this guy that was an executive vice president for what was called specialty. They did muscle milk, they did spices, they did anything you can think of, stoop stock, whatever.
Yeah.
And we used to work out together from when I became a supervisor all the way on up, and we became pretty close. and he had retired and went into the private equity space.
Oh, no
And
shit.
he had just given me a call one day when I was dropping my son off at preschool and said, "Can you go and help this guy out? He's running a coffee factory and they need a little bit of help. Do you want to do this?" And I said, "Yeah, I'll call him." And they offered me the director role. And I worked there for from June until November, when we kind of had some more family things happen.
Right.
And I was like, I wanted to move down there. But all during that time, I'm trading.
Mm-hmm.
I'm trading the London session. I'm still like trading bonds, and that's it. I'm not trading anything else. And I'm still actually having some pretty good success. And what happens is that I come back and my wife decides to start coaching girls hockey for high school. And I'm like back, and I actually was like, I don't know if I can sit in the basement and not be socialized, because I'm a very social person.
Right.
So I got what I thought was a part-time job, but it's actually working at an air conditioner manufacturer as a supervisor.
Mm-hmm.
And I work 3 days a week, and it's like a really good schedule. Well, I get there and I meet all these people, and, we're talking about how our jobs as supervisors are just to enable people to do their jobs. And the way that these people have everything set up, and the people that report to me, it's like, okay, this is like a dream for anybody. Like, if you're starting out, you want to be in operations. I've got guys that work for me that I just can't even believe that I got that lucky too.
Yeah.
So now I'm there. A couple of my buddies work there, work 3 days a week. You don't even feel like you're working some of the time. There is a lot of the same nonsense that you deal with, but my job is just there to make sure that those guys have the resources that they need. And those are the people that I'm sending to Eric's YouTube channel, and they're getting it. It's like
I love that, man.
And a lot of them are just super intelligent, process oriented. They know it inside and out, and it's just like, okay, so this is pretty fun. But what's happening is that my trading has become a little bit cumbersome. It's becoming bigger, and because we're still growing.
Mm-hmm.
So I started there in January, and not 3 or 4 months later, I'm making more money than I ever have trading. And I'm sitting here thinking, oh man, what am I going to do? Like, I've got a lot of goals that I want to accomplish, but I'm taking my time because I kind of got ran through the ringer at that coffee factory.
Yeah.
And it was I cannot back off when there's something that needs to be done. I can't back off of it. So there was a lot of 20-hour days. You'd have working 2 shifts was a short day for me.
Right.
And that was my choice. What really sucked is that I had to leave those guys, but I had stuff family wise that came up, and I had to come back home. And I mean, it's been nice that trading has afforded me to do that stuff.
Yeah, for sure, man.
And kind of what's happened, what also happened, what fueled the bonfire, is that I was also trading with, so I would watch people like Fleury and Job, and I'd watch Banks, and I'd watch Baba trade bonds.
Mm-hmm.
And I was just like, this is it. There's nothing different. I'm going to do this. I know that I can make a living doing it. And that's the end of it. And I was trading with those guys in the morning at the open, and it was just like, holy moly. And even Cap traded bonds he just didn't share, but I'd see some of his trades that he'd have.
Yeah.
And they were just like, okay, this is just ridiculous. I'm going to just do this forever. But that's kind of where I'm at right now.
Yeah.
It's like the whole bonds thing is where I'm going to stick at. And when it comes to how we get there,
Mm-hmm.
a lot of luck has to take place, but it's got to be a lot of you've got to be self-motivated, and there's a lot of grifters out there, but don't get tied down with that, because there's enough information that you can get from people.
Even the grifters,
even
the grifters will teach you something.
Well, and that's why I always say I can look on Twitter,
mm-hmm.
and after a while, I can tell if you're a real trader or not by what you post.
Right.
It's really easy to see.
Right.
Some people have kind of let me down over time because they're just really good at hiding it.
Mm-hmm.
But like I said, when I'm only looking at those 4 guys and looking at day trade, for example, Brent had a conversation with the CME about some of the new products that they're offering. I don't need to look into the products. I don't need to do anything else other than see what it is that his opinion is, because he is somebody that I take what he has to say very seriously. And that's all that I'm going to take it at, because I'm not going to convolute my process. And then what I'll do is I'll see how it fits in with my trading process and kind of like I said, you can cultivate your Twitter feed. And I've been lucky to have that for multiple years now and can usually use a lot off of that.
Yeah. Well, Rick, man, I gotta say, this has been one hell of a conversation. I think we covered quite a lot of stuff. You checked every question I have on my box, and I don't even think I had to ask many of them. So, I think we're just really in sync today. I really love that. Do you have anything that you want to say before I wrap this?
Yeah, check out Vanta if you're a beginner or an intermediate, because the thing is that that's where I believe within that place in general is how you can kind of decrease that learning curve. I really do believe that. And if people start to show up and they want to know how, I'll direct them, because I have a lot of ideas as to how it is that those guys, like, you got to ask the question, right?
Yep.
And those guys are just going to keep doing what they need to do. They're going to trade. They're going to show you, but you got to ask the question. And there's a certain way that you can go about it to kind of shorten that learning curve. And I think that that's super important.
I agree, man. I agree. I've learned so much since meeting up with those guys. But I think, unfortunately, it is time for us to wrap up today and let Rick get back to enjoying his Sunday. But the fun doesn't have to stop. If you enjoyed today's conversation, you still want more, go check out our guest directory where you can browse through all the amazing people we've had the pleasure of speaking with. And if you want to learn more about Rick and how he trades, he's active on Vanta's Discord and on Twitter at WhiteBoyRick3. We'll be sure to include all those links in the episode description, and I'll be back soon with another exciting episode. But till then, if you got something useful out of this, let us know by leaving a rating, and have a great day. This podcast is intended for informational and educational purposes only. It does not constitute financial or investment advice and should not be construed as such. The hosts, guests, and contributors of this podcast are not licensed financial advisors, brokers, or professionals. Any trading or investment decisions made based on the content of this podcast are solely at the listener's discretion and risk. Trading and investing in financial markets carry inherent risks, and past performance is not indicative of future results. Listeners should conduct their own research and seek advice from qualified financial professionals before making any financial decisions. The views, opinions, and information shared in this podcast are those of the individual contributors and do not necessarily reflect the views or policies of the podcast creators or associated organizations. Produced by China Shop Productions.